So I'll be discussing September 2025 financial management question paper. Here it is. ICI website. The latest question papers are available here. This is the FM descriptive part. After this, I will discuss the MCQ part. So this is the question paper. Section A is FM part. Say this: the capital structure of a company is given to you, equity shares and preference shares. Additional information: equity shares are quoted at 60 each. Quoted means its current market price. New issue will be priced at 60, that is issue price. Fully subscribed. Flotation cost is 4 rupee. So when you take net receipt, you have to take issue price 60 minus flotation cost 4 rupee. Issue price of 8% irredeemable preference share is 45. Even for this, issue price is given and there is no flotation cost. Current market price of 8% irredeemable preference share is 55 rupees. So market price is 55, but issue price is 45. So when you do net receipt, you will go by the issue price only. RSA Limited has been paying dividend to its equity shareholder at a constant growth rate of 5%, and dividend paid this year was 2 rupee per equity share. So this is dividend plus growth model. This is Gordon's growth model. Now you see how the question is given. They want you to do three things. Cost of equity using Gordon's model. So it is KE is equal to D1 by P0 plus G. Anyway, G is given. D1 you can find out if you know D0. D1 by P0 plus G separately. Second, cost of irredeemable preference share. One good thing with irredeemable preference share is you don't have to do that RV minus NR etc. You only have to do preference dividend divided by net receipt into 100. There won't be 1 minus T also for this. There is no tax benefit on preference. Then they want WACC using market value. That's why they gave you market price of equity also, preference also. And you can see there are only two sources. That means your WACC table will be very small. Particulars, equity, preference. For equity, if you do 1 crore by 10, you will get to know number of shares. That multiplied by quoted market price. For preference, 5 crore by 100, you will get to know number of preference share. Multiply by the market price. Then total, assign the weight. Sub question 1 you would have done cost of equity. Here you have done cost of preference. Then weight into cost, the total. Now you see the marks distribution also. I want you to pay attention specifically to this. When they say 2 plus 1 plus 2, that means for cost of equity, first question is 2 marks. Second sub question 1 mark because that was very easy also. WACC table 2 marks. So even if you are not able to do full, say WACC main answer goes wrong, you will still get 3 marks if your working note 1 and 2 is correct. Okay, so this question is from cost of capital chapter. Next, question 1B. Observe here 1 into 5, and they have asked you to calculate 5 things. That means each one of this will have 1 mark weightage. Read. Dividend Limited has outlined its financial projections for the coming year 25-26. Company plans to utilize total assets amounting to 50 lakh with 35% of assets financed through debt at an interest rate of 10.5%. That means balance will come from equity. We have done similar sum. 30% was funded by debt, balance was equity in classroom sum. Sales revenue given, direct cost given, other expenses given, tax rate is given. So from sales, if you take out direct cost and then take out other operating expenses, you will reach EBIT. From this you have to take out interest, there is a debt and there is a rate of interest. That will give you EBT. Then you take out tax rate, you get EAT. That itself is your first question. And here NP margin after tax. If you remember in ratio class, I told you to be careful about NP margin. We did both pre-tax NP, post-tax NP. Here properly given after tax. That means you have to take PAT by sales into 100. Return on asset after tax. If you remember, this was there in ratio topic. Assets, now the total assets are given here. Total asset amounting to 50 lakh. Actually, we need average total assets. For average, we need opening balance, closing balance. If they don't give, then only one number possible. Correct? You did PAT add back interest divided by average total asset into 100. Then you have asset turnover ratio. Do you remember the formula for asset turnover ratio? Turnover by total asset, not into 100. This is in times any turnover ratio. Now turnover is sales given 55 lakh, asset is 50 lakh. So 55 lakh by 50 lakh will come to I think 1.1 times. That's all. You get 1 mark for just this. How to do return on equity? From EAT, I don't see any preference capital. So EAT itself is earning available to equity shareholder. Correct? Whole divided by equity shareholders fund. That they didn't give you directly. They said they want assets 50 lakh, 35% is debt. That means balance should be equity. So you get earning available to equity shareholder divided by shareholders fund into 100. That's it. 5 marks. Very easy question from ratio analysis actually. Can I? Moving on. Question C. This is from investment decision, capital budgeting question. Global Beverage Corporation is considering replacing one of its bottling machine with new machine. Existing machine was purchased 5 years ago for 16 lakh rupee. This 16 lakh will not be cash outflow today. This was bought 5 years ago and this is only for your depreciation calculation and has a total useful life of 10 years. Read it slowly. Total life is 10 years. You bought it 5 years ago. That means standing today you have only 5 more years. You have to take decision in year 0. 5 more years. Currently company can sell this machine for 9,60,000. If you decide to replace the machine, old machine will go and that old machine will have the market value of 9,60,000. The new machine will cost you 32 lakh. Now year 0, 32 lakh minus this 9,60,000. We have done 2-3 questions on replacement decision like this. Having the scrap value of 3,20,000, useful life is 5 years only. That means whether you continue with old or shift to new from today, it's only 5 versus 5. Correct? We did a question with 11 years and 8 years. 3 was over, 8 versus 8 we did. Then they said with the new machine, annual contribution margin is projected to increase from old 16 lakh to new 18 lakh 40,000. That means you can take the difference as incremental contribution. Or you can start with particulars existing new contribution, old number, new number. Operating efficiencies are expected to yield further saving of 3,20,000. That means not only this extra 240, you will have to add additional. And you remember this money saved should be counted as money earned. And you have to add this also. Depreciation is under straight line method over machines 5 years. Now for this you have to calculate depreciation of old machine, that with 10 years life. In that 5 years they would have taken, balance you have to take. New machine anyway original cost is with you, 32 lakh, its scrap value is with you, its life is only 5 years. Following? So once you take out depreciation, you will get PBT, then they gave you tax rate, you get PAT, add back depreciation, you get CFAT. CFAT of existing, CFAT of new will give you incremental CFAT. And then you have to do NPV of incremental decision. Year 0 will be 32 lakh outflow minus 9,60,000. And year 1 to 5 will be extra CFAT into DF. For DF they said take 12% as rate. Following? You are required to calculate the NPV. And they gave you present value interest factor. A is printed, that means this is annuity factor. Why did they give you 5 years? Because incremental CFAT same number 5 times. 5th year they gave specifically because scrap value. Year 0 replace the machine, 1 to 5 incremental CFAT, 5th year scrap value. Then if you get positive answer, replacing the machine is good. If you get negative answer, continue with existing machine. You have done a bigger question than this actually. That had table, material, labor. Remember here they directly gave you contribution, only that extra saving you have to add it. 5 marks question from investment decision. Can I? Question 2A. Now you see the distribution of marks here. This is how evaluator is also going to allot marks. If you get first sub question correct, 1 mark. Second, 1 mark. So even if you do a mistake in one of this, you'll still get marks for others if it is correct. And I'll just show you what is there in the question. Next page they gave you this. EBIT, fixed cost, amount of bank loan and bank interest, 2 things to be done, EPS, MPS. 1, 1, 2, 2, 1, 5 sub questions. This is how they're going to give you marks. Read. A company is a mid-sized company engaged in manufacturing and sale of industrial equipment. The capital structure is given. Equity share capital is with you. Debenture is there. 6% interest. If you multiply, you'll get interest amount. Bank loan, they gave you percentage, but they did not give you the amount. Maybe you have to do a reverse working. We had one sum where we calculated interest and from there reverse working we found out debenture value. This is a missing number. Other information. Sales given. Now, when you have sales and PV ratio, sales into PV ratio will be directly contribution. DOL is given, DCL is given. Now if you have DOL, contribution to EBIT. Now if you have contribution in EBIT, missing number is fixed cost. Able to follow? Sales was there, using PV ratio we came to contribution. Between sales and contribution, missing number is variable cost. That means we came till EBIT. From EBIT we have to take out interest. One interest we can take out. Another interest we have to keep that box blank. Correct? But because combined leverage is with you and operating leverage, you can get DFL. If you get DFL, EBIT to EBT. EBIT I told you, EBT will come from DFL. Now missing number should be interest. In that one interest is already ready. Another interest will be balancing figure. I hope you are able to visualize this. We did two companies, M Limited, P Limited. We wrote income statement, there were a lot of missing numbers. Then we went to working note, got one number and then all the fill in the blanks we did. Same thing here also. You will get interest, but that interest will be 8%. Suppose interest comes to say 51,000. Then you have to do something like this. If 51,000 is 8%, how much is 100% loan amount? That will be the value of debenture. Okay. And once you minus interest and reach EBT, you can take out tax, you reach EAT. I don't have any preference shares, so that EAT itself is earning available to equity shareholder. If I divide that by 12,500 share, I get EPS. And if you remember P ratio formula, PE ratio formula, anybody? MPS by EPS. If P ratio is given, EPS you calculate, multiply you reach MPS, and that they have asked you in the last question. Find out market price. So first EBIT you have to do using DOL data. Then fixed cost excluding interest, that will be contribution and EBIT missing number. Amount of bank loan will come when you do EBIT, EBT using DFL. Bank interest in the same working. EPS I told you, EPS into P ratio is market price. Okay. This was 7 marks question from ratio analysis. This won't even take too much time actually. Normally a 7 mark type question would be a lengthy question. This is not even lengthy question. Only one missing number you have to find out. And when you have DOL and DCL, DFL is missing number. You know DOL into DFL is this. So 3.84 by 2.4 you will get some 1.1 or 1.2. That is DFL. And then EBIT, EBT you can complete. This is an easy 7 marks question, not even lengthy. Question B, this is from dividend topic. Saraswati Limited has started its business a year back with paid up capital of 50 lakh rupee. Other details are given to you. Earnings of the company 5 lakh. You see this market price per share using Gordon's model. That means P0 is given. Left hand side. Normally if we find out P0, they give us dividend. Here P0 is given. Internal rate of return on investment, this is R. Correct? Cost of capital is K, and since we are discussing equity, it is KE. Now you notice here R is greater than K. You remember this. If R is greater than K, then it is better to keep more reserve and pay less dividend. But because it is Gordon's model, it can't be zero dividend. That's why they did not let you decide dividend. They gave price already 159. It's a reverse working question. You have to decide D. Number of shares is given. Now from earnings, if you divide number of shares, you get EPS. Correct? Calculate dividend paid per share using Gordon's model. 1. Second, what will be the optimum dividend payout ratio according to Gordon's model? Look at this. I find this little surprising actually. When R is equal to KE, doesn't matter how much you pay. If R is greater than K, you have explanation. R is less than K, you have an explanation. R is equal to K, you pay more dividend, you don't pay, it won't make any difference. So for this question, answer is theoretical answer. When R is equal to KE, it makes no difference how much dividend we pay. Full stop. You can't even write 0% or 100%. Okay, this is a reverse working question. You have to first put 159.09. P0 is equal to something. This is ready already in the question itself. Then you have to remember E into 1 minus B. or dividend, KE minus G. G is B into R. Left hand side is available. Earnings you can find out by doing total earnings by, that will be 10 rupee. Out of 10 rupee, how much is paid? The D you have to calculate. Let D be X and then do. We have done one question like this. It was there in class material itself. They said 52 rupees should be the price, and then we got the dividend payout ratio. We did 6 minus D open bracket and some calculation. So reverse working sum, 3 marks only. 2 marks for reverse working, 1 mark to say it won't make a difference. Yeah, this was from dividend topic. Next, question 3A, 7 marks sum. AVS Limited is planning to diversify its cotton manufacturing business. CFO intends to raise fund of 22 lakh for this project. The current estimation of EBIT for new project is 5 lakh. Now you have total funds, you have EBIT. Company share is currently selling at 120, currently selling P0 as on today. But it is expected to decline to 110 in case the funds are borrowed more than 10 lakh. Exact language. There are questions in part B, risk and leverage. As of now, share is sold at 200. If you borrow more than 10 lakh rupee, it will come down to 160. Similar sum is there. Read this. It is stated that the cost of debt will be 14% up to 8 lakh, 16% for additional 2 lakh, and that is above 8 lakh, and 18% above 10 lakh. You have done many questions with stepwise interest calculation. First 8 lakh into one rate, next into 16%, and one more. The tax rate is 30%. Following options are available. They gave you 3 options. You had questions proposal P, Q and R. Here you have option 1, 2, 3. 60 debt, 40 equity, 50, 50, 40, 60. Considering the objective of maximizing EPS, which option is feasible? That means they want you to work out EPS for all 3 options. Whichever EPS is highest, that you have to select. Now for EPS computation, option 1, option 2, option 3, you need EBIT. Tell me, do we have the EBIT in the question? Here, third line, the current, 5 lakh rupee. Can I write this everywhere? Yes, this won't change. After this, interest, we will have to do working note, because how much debt, accordingly your slab wise calculation is to be done. Then you reach EBT. Do we have tax rate in the question? You saw it was at the end, 30%. If you take that out, you reach EAT. There were no preference shares. You have to then divide by number of shares. Now this number of shares will depend on the price at which you are issuing. That will change. There was some decline, they said. This will give you EPS. 3 EPS numbers will come, whichever is highest, that is the best one. I'll just show you how to do interest calculation. What is the first plan that they're having? No, debt is 60%, correct? In Calci, total fund is 22 lakh into 60%. Option 1, out of 22 lakh, debt is what? 20,000. That means balance should be equity. 8 lakh? Alright. Now 13 lakh 20,000. How do we pay interest? Observe this part. It is stated that the cost of debt will be 14% up to 8 lakh. That means I should do 8 lakh into 14%. One number is ready. And then here they said for additional amount of 2 lakh above 8 lakh, I have to pay 16%. That means next to 2 lakh, I have to pay 16%. But this will be only 10 lakh. I need another 3 lakh 20. For this last slab was 18%. Anything above that, this number. This will be the total interest. This will go here. Okay. And here you observe your debt amount is 13 lakh 20,000. And what did they say for equity? Fifth line, company share is currently selling at 120 and is expected to decline to 110 in case the funds borrowed are more than 10 lakh. Am I borrowing more than 10 lakh? Yes, that means this number to be divided by 110. That will give you number of shares. Anybody? 8,000 shares. This 8,000 shares will go here. and then you get EPS. This way, 3 answers, whichever is the best, you select. Very easy question actually. Takes time because you have to do this stepwise calculation slowly. And whether to take 110 or 120, not 120, 110 or 120, that depends on how much you borrow. Okay. Second one is 50-50 combination, 22 lakh, 2 arrow marks, 11 lakh, 11 lakh. Another is 40-60. One option top to bottom you do, other two you can go faster. This I have been saying in class also. Whenever you have 3 plans, 3 options, do one end to end. You'll get the flow. Then will be easy. Don't try to fill box by box this way. Lot of confusion is possible. You know there are too many numbers. Take one option, do till EPS. Once you know the flow, second, third becomes easy. Okay. This question is from capital structure. You have proposal, PQR, indifference point, all of that. Easy question, but this will take some time. Next, B. This is from cost of capital, reverse working question. I found this question slightly good, different, not impossible to do. Again, they have given answer to you. You have to do reverse working. A company issues 20,000, 18% debenture of 100 each. So interest will be 18 rupee. Interest is on par value anyway. The debentures are redeemable after 8 years. So this is KD with redemption. The cost of debenture using approximation method is 14.58%. Approximation method is your formula and answer is already given, 0.1458. If you remember, KD was I into 1 minus T, RV minus NR by N, RV plus NR by 2. This was our formula. And this will be 14.58%. I won't do into 100, so I'll keep it as decimal here. Now, how much will be interest? 18% is always on par value and tax rate is given as 30%. That means here I should be writing 18 into 1 minus 0.3 plus. Do we have RVNR? Let us check. They said you are required to calculate issue price of the debentures if, read slowly, redeemable at par. And here they said the debentures will be redeemed after 8 years. Now tell me what to do here. 100 minus, we don't know this number, correct? After how many years? 8 years, correct? This will be average into 100. Into 100 I am not doing, you know the reason. Now we have to do reverse working and get the value of X. Following answer is with you. You only need this number. Then revise cost of debenture using same formula if it is redeemable at 10% premium after 8 years. Now for this, you would have found out this number, that you keep same, but this will not be 100, this will be 100 and premium. So this will become 110. This X number you would have got. So answer will change now because you changed it. It won't be 14.5, it will be some other number. Yes, they could have asked in MCQ category, but they know what happens if they ask in MCQ category. Students won't solve X. They'll put 4 formulas and 4 options and check. So they said you work out unknown number as X. Okay. Next, last question, theory. Discuss any 2 advantages and limitations of stock split. You had stock split in dividend last discussion. There in the bottom you have 2 advantage, 2 disadvantages. Now 4 marks, 2 advantage, 1 point each, 2 limitations. So 4 bullet points you need to write. 4 marks, 1.1 mark, simple. Explain briefly. All of this is in the types of financing topic. Okay, callable bond, puttable bond, masala bond and all of this. Question C is from first chapter. Explain 2 basic functions of financial management. This was our first page. Acquisition of fund, utilization of fund. First page, first paragraph. You have the FM class material with you. First page, top 4th, 5th line only. Acquiring, from where to get money, utilization, how to use money. And then they wanted to explain also. Explanation is there in the same para bottom. After this, see this again. I don't know how many times I've told you this in class. Explain 2 limitations of profit maximization objective of financial management. Same topic, profit versus wealth. In that profit maximization has certain limitations. There are 4 limitations. Term profit is vague, you have to keep risk in mind. 4 points are there and they've asked you only 2 and marks is 2, that means they're going to give you 1 mark for 1 point. That's all. After this is your strategic management paper, doable paper. Now coming to MCQ section, I could not get it on ICA website, so this is the photo from sent by one student of last batch. Hope it is readable. Yeah. Case scenario 1. Let's understand what they have done. Big story. Assume 360 days. Using above, you are required to answer question 1 to 5. Okay. So, and you can see here 2 marks. Okay. This is question 1. Same way. Question 2, question 3, question 4. Now, read. Let's not worry about sub questions. Understand main story first. RG Limited has estimated that number of operating cycle will be 3. Answer is given, and here I read 360 days in a year. That means one cycle is 120 days. 360 by 3. Normally we do 360 by 120 and then say 3 cycles. That means you know the final answer. One cycle period is equal to 120 days. Amount of working capital after taking 5% contingency is 101,850. This you have to do reverse working. If 101,850 is 105, then how much is 100? Able to follow? So that will tell you working capital without considering this safety margin. We had one question, we calculated full answer, we added 20% safety margin. Here after adding, they got this number. Got it? Then they gave you opening FG, closing FG. With this you can get average FG, and that too they wanted to waste your time. See, opening number is given, closing will be lesser by 4,200 from opening. So from 31110 you have to minus this and then do divide by 2, you get the average FG. Opening raw material, closing will be directly. Here don't do any plus minus, directly average. Opening WIP, closing WIP more by something. Now with these 3 bullet points, you have average FG, average RM, average WIP. Correct? Wages and manufacturing expense given. This you need for COP. Selling and distribution expense, this you need for COGS. Average creditor is already given. This you need for credit purchase. All purchases will be done on credit basis only. So if you find out average creditor with that purchase, that itself is total purchase. No cash purchase separate. Assume 360 days. Using the data, you are required to answer the following question 1 to 5. What will be the RM period and WIP period? Now tell me what is the formula for RM period? You need average RM divided by RM consumption. Now for average RM, you had opening and closing. Correct? And then you need purchase. Purchase details are not given. This is where some reverse working is to be done. Okay? Now you see the background story to this. 3 cycles given. With 360 days, it comes to 120. How to get 120? R, W, F, D minus C. Correct? Now, if you find out other things, you have creditors. Now, what is this average creditor? This will be creditor period. Numerator is average creditor divided by purchase. Creditor period. Numerator is given. If you know creditor period, then you can find out how much is your purchase. Getting it? The better way to solve this is do it as a 10 marks detailed working question. Start in this style. This is how you want. R, W, F, D, C is equal to 1 cycle period. And this number came to 120. You know how I got 120? 3 and they have done 360 by 3. And then I need 1 by 1. For each of this, I have to do the formula. For this, I need average RM by RM consumption. Now, average RM was there in the adjustment. For our RM consumption, opening and closing is there. Only purchase you have to find out. If you don't know, keep it pending. This purchase will come when you do creditor. Able to follow? And then WIP. You need average WIP. That was in the bullet point. And for this, you have to take RM consumption plus labor plus manufacturing overhead. Good thing is, labor and manufacturing overhead, together they gave one number. wage and manufacturing. That means only thing you have to find out is RM purchase. Hope you are following. And you notice this, after taking this into consideration, 101,850. In Calci, can you do? If 101,850, if 101,850 is 105, how much is 100? 97,000. And how do I get working capital? Annual operating cost divided by number of cycles, last formula of this. So if this is to be 97,000 and number of cycles are 3, then I can find out my annual operating cost. Correct? What's the number? 2,91,000. This is my annual cost. In this, some should be material, some should be labor and factory overhead, some should be office admin, some should be selling and distribution. Now you see in the question, here they gave you wage and manufacturing, they gave you selling and distribution. There is no office admin anywhere. So I'll first put these and this, then this has to be raw material consumed. Using this, you have opening RM, you have closing RM, missing number is purchase. This you should do working note first, then only you will be able to crack the sum. Otherwise, you won't be able. I don't see any office admin in the question. Okay, and then RM period, WAP period. In the formula, average numbers you will take. Just a second. So this is second page. Creditor payment, debtor collection. Total operating expenses and cost of goods sold. And then cost of production and FG period. Basically, you have to solve it as a full 10-mark question. This is fourth. I think I have one more. Fifth question is, what will be the RM consumption and credit purchase? 2 marks. So this is a case study based question. This one question I want other students, all of you also to practice once again. Okay. Now, sixth question. This is the easiest question. ABC Limited gives you following. They gave you current liability. They gave you current ratio. They gave you quick ratio. What will be the value of stock? I think this was your first or second question in ratio topic. We did first 5 questions as warm-up questions. In that second question or third question was this. Current ratio is 2.5. If you know the current liability, with 2.5 you can find out current asset. And liquid ratio is equal to CA minus stock by CL. You have CA, you have CL. This is a left-hand question. Okay, 1 mark only. So, happiness is restricted to 1. And this was another 2 mark MCQ. Read this. Prax Limited is, you tell me which question is similar to this in class. All equity finance company currently valued at 2,100 with cost of capital 18%. When it is all equity finance company, KE itself is KO, correct? And 2100 is the valuation. They are planning a strategic financing restructuring by repurchasing 325 lakh equity. They want to do buyback. Now to do buyback you need money. For that they will issue 16% debenture. We have done that stop go sum in the class before buyback, after buyback, correct? And if you remember, even in study material there was a similar question, buyback sum, and here company maintains its EBIT and tax rate is 35%. What would be the value of equity after structure modification as per approach? That means they want you to do value of the levered firm, because after buyback some shares will come down, that much of debt will get added. What happens when you add debt? You are a levered firm. And how to find out value of a levered firm? Value of unlevered firm plus debt into tax rate. First you have to do value of unlevered firm. That was there in the question already. Existing valuation. Only debt into tax rate to be added. But you observe they did not ask you value of the full firm. They asked value of equity only. That formula will give you value of full firm. From the debt if you take out, you get value of equity. Good question. Not tough, but good question. Because students don't do so much for MCQ. This is a descriptive question converted to MCQ. And then this was another MCQ. Last question in FM. K Limited is replacing an existing machine. Replacement cost of the machine is 1 lakh now, and it requires a maintenance of 20,000 at the end of every year for 5 years. At the end of 5th year, it would have a scrap value of 10,000 rupee. Discount rate is given. PVIF A, when they say annuity for 5 years, PVIF 5th year, this is for scrap value. What will be the equivalent annual cost for the machine? So you have year 1 outflow, year 2, year 3, year 4, year 5. All repair and maintenance cost, cash outflow. And then 5th year you have cash inflow. That's why they said cost here. So year 1 into DF1, year 2 into DF2. Actually 5 years it is same number. So I can do 20,000 into summation of factors. But these are outflows. 5th year you have scrap income. That you multiply by 0.519. Then you get the net figure. From there you can get the answer. Yeah, and that too good thing they did. 20,000 at the end of every year for 5 years. So you don't have to even do big table. 1 to 5, directly 5. Okay, that's all. Only 8 questions, 7 questions into 2 marks, 1 question into 1 mark. Total 15 marks MCQ, 35 marks descriptive I already discussed. From here is your section B, strategic management question paper. Okay, with this we are done with question paper discussion.